Hey guys, welcome back to my channel. So in today's video, I'm going to show you guys when to use a break of structure with an imbalance within a schematic. So a lot of times people are asking me questions in my free group chat about when to use break of structure, when to use imbalance, not all the imbalances work and stuff like that. So what you want to do is start with your back testing first and acknowledge where you're looking for the right opportunity. So right now, this is a little bit back tested price actions over there. I'm looking at this bottom zone, and at this bottom zone, I should be looking for an accumulation. So there's actually one here, which I'm going to zoom into for you guys. I'm going to go down to the 30. And I'm going to mark this accumulation up. Now, a lot of people ask me questions about all types of things, times, pairs, supply, demand, and honestly, a lot of people got training from all over the place and places I didn't get any training. So sometimes other people's strategies or definitions may not necessarily fit in with what I do. So it doesn't mean someone's right, someone's wrong. I just show you guys what I do and what works for me and my team. And you know, if you guys want to implement it, you have to be aware that you may have to come in with a total different mindset than whatever you've been taught. So I'm gonna mark this accumulation really quick and teach you guys what I teach the team about accumulation entries. Okay, so first things first, I mark up my spring, which is my lowest point, my ST, and then one of these are going to be my selling climax. I think it's going to be this one. And if that's my selling climax, the opposite of that is my AR. If I find the opposite, which is my AR, that means I find my trading range, which is my AR and my selling climax. So those are the first 5 steps all the time. So if you're not doing in that order, I would definitely pause and rewrite that down. Okay, cool. So if this is my trading range, well, let me fill in the blanks. My UA would be my up thrust. If that's my up thrust, well then this right here broke structure after the spring. And after break of structure is when we look for an entry. So don't let that go over your head. After the up thrust action, we get our spring. And then all this doesn't matter until we break our structure. So if you were here in real time, you wouldn't just trade off of this little gap right here. One, you don't really have that much unhealthy price action. And when would you set a limit? Right here? No. So I always teach my team how to be realistic when backtesting. So if you're sitting here at this time and you're like, okay, we have this thing building, I would have an alert right here for break of structure. As soon as that alert goes off, then I'm looking for an entry. So I see the strong push up. I don't really see unhealthy price action, so let me just go down another time frame. No. On the 5, I have something. On the 5-minute, I have something. So let me put an imbalance box here. Now, for me, my trading range needs to align with my entry. So I can use the wick or the body. So I'm gonna align to the body in this time frame. I'm getting a little bit closer. So this one I don't think aligns perfectly. No, it doesn't. But we did have an internal retest, so it came back in, retested this range, but we didn't get to enter there. So this area still shows me that there was some type of respect from the selling climax to after the spring having that internal retest. And if you don't know what I'm talking about, definitely refer to the Wyckoff books. So we have our imbalance. So a lot of people ask me if there's several imbalances, which one do you choose? Like I said, if you were here in real time, you can't choose this one because you didn't get a break of structure. All these pieces have to fit together. There is no imbalance between here and here that you can use. You don't use this one. You have to use the unhealthy price action. You don't use this one. Okay, so this one is pretty much close to being filled here. You still need that massive push up, right? So I do teach about institutional candles and understanding where the move is. Too many people are just chasing random gaps in the market and trying to buy and sell. So like I said, it's something that I do teach in my course. but take what you can from this video and try to implement it. Okay, so if you're looking for a schematic, you need to break a structure after the up thrust. That's a must. So if you, like, if this went up to here and didn't break the structure, the trade would be invalid. Okay, cool. So I'm gonna put my long position. I'm gonna put it at this body or these wicks. If you don't know, you should watch a stop loss video where we put our stop losses and one where we put our take profit. This needs to all be aligned. A lot of times in this regroup chat, I see people not marking their charts up to standards, and you know, it's hard for me to give feedback on something that looks a crazy mess. And then my nearest equal highs, that give me a 1 to 10. This gives me, I need 8.5 minimum. So I'm just gonna take it to here for 9.9. I'm gonna let this play out. Let me just show you guys that we're tapped in. And when do we get tapped out? So we are on the 5 minute here. I can go up a time frame. And we get smashed. Okay, so the main takeaway is when you have a schematic, you need to wait for the breaker structure and you need to use the lowest imbalance that aligns with trading range. Again, write that down. Breaker structure, lowest imbalance that should align with the trading range. Okay, so that's when we use breaker structure with imbalance with the schematics, you guys. So I don't want to say it's simple because it's not, but you have to have the full picture training, which you know, even for me, I don't have that much in-depth videos on YouTube. I'm trying to push them out, but a lot of stuff needs context. A lot of stuff needs daily experience. Like I offer in my academy, the Smart Money Academy. Link is in bio, as well as my free crash course. You can also go to Smart Money Academy, sign up, and enroll in that. And yeah, so hopefully you guys got value from this video. Thank you guys so much. Don't forget to comment, like, and subscribe, and I'll see you guys in the next video.